Ladies and gentlemen, welcome back to Pounding the Table, a special edition. We are here joined by Chai. I'm going to try this last name, Phrompechrut from Olive Invest. So he's the CEO and co-founder of Olive Invest. We were able to bring him on after playing around with the app for a few weeks. Absolutely love it. It's definitely a incredible tool, especially in this time of the markets, in terms of playing options, not just directional with puts and calls, but using Olive Invest to actually be able to make money either directions in certain ways. Now, Shai, before we jump into Olive Invest, which we're really excited to kind of dive into, I know you actually made a portfolio based off one of the weeks that we talked about on the podcast. So really excited to explore that, but would love to hear just about how you came up with Olive Invest, right? Was this something you've been dreaming about for years? I know you came from kind of the institutional world, correct?
That's right. That's right, Avi. And thank you for having me on, both Avi, you, and Joe as well. I did come from the institutional world. Olive, frankly, is actually one of those situations where we didn't let a good crisis go to waste, right? By way of background, I I was in private equity and reinsurance for 12 years. I was always a principal, meaning that I was invested as a principal as opposed to acted as intermediary. I focus exclusively on financial services. I helped lead or led about $1 billion of deals over that time period. And believe it or not, I never used options personally. I had been involved with some hedging programs at the institutional level, but personally, I thought of options as being purely speculative and frankly, not something that I as an individual should use. And then COVID hit. And when COVID hit, I had some private banks calling me on, hey, do you want to buy these structured notes, on SPY or on whatever index you can think of? And when vol was really high, there were some pretty interesting notes to buy, right? Like, hey, don't lose unless it drops, the SPY drops another 25%. But if it goes up, you make up to 15%. So I thought, wow, that's kind of a good risk trade. And I started digging into it. And lo and behold, my entire personal portfolio uh, became options personally. And I hooked up with my business school friend at AG, who was not a finance guy. He is a recovering hacker. He co-founded and was CEO of a cybersecurity software company, now private equity owned. And we basically said, let's go build something that allows everyone to see another way to invest using options to generate or create defined outcomes, similar to how the ultra high net worths have been using structured notes or some other insurance providers sell in the form of annuities, and do it using technology so that we can scale massively. And, I won't go on too much of a monologue, but my spirit is really kind of hinged on this idea that retail shouldn't be dumb money, right? I mean, I think that there's a huge revolution happening where historically institutions held all the cards, like, pension funds and endowments, insurance companies, but the pockets have moved significantly, right? You people now control their own retirements. You think about IRA, 401ks, which are kind of 40 some years old. It's a very young experiment. Roth IRA is probably in its 20s. ETFs probably even younger. So we are in the very early innings of how individuals will invest in the future. And it gives me some level of excitement that, we can be a part to help retail invest better for better outcomes going forward. So, that's kind of the story of how we got together. So I left my job in the summer of 2020, and then we poked around, did our due diligence, and launched Olive in April 2021. We came up with our private beta in September, October 2021. And only in May, June of this year, we started to launch it properly and started collecting revenue. So we're very, very early.
You guys have fantastic Twitter ads. That's what caught my attention initially, and I reached out and I was playing around with it before I reached out to you, and really happy you were able to come on the show and kind of walk us through. And I apologize, I have a lot of sirens here in the background if that's picking up. I've been talking about this on a few of the episodes that we've discussed. Is the sandbox element, right? Because like a lot of people are uncomfortable with options, and this is again taking options beyond just calls and puts, right? You're doing different strangles and things that I don't even know, what I'm doing necessarily, which is great because Olive kind of like puts it in front of there for me. But in terms of using the sandbox to play around with, you don't need to start with real money. Now you do connect into, I believe, TD Ameritrade. You can connect directly with your current portfolio. And then how is that? How does that work then? It will actually do the trades on your behalf via the API then or something?
Yeah, exactly. And we're not a broker, we're not an advisor. We are simply a technology platform that allows you to do what you would have been manually doing, kind of painfully, call it.
Thankfully,
Uh,
step by step.
yeah. So we're an enabler, but you're right. All of our strategies, if held to maturity, cannot lose more than buying the underlying outright. So it's not levered options play, buying deep out of the money call option and praying that, the underlying will go up and you'll be able to monetize. They all tend to be multi-lag. So, it's more complex. But from a risk standpoint, we craft all 150,000 some live outcomes based on a defined risk and strategy. So the reason we have a sandbox account or virtual money paper account, whatever you want to call it, is to allow people to see what they could actually achieve without, having to risk their dollars. And sandbox is built on real market data. It is using the most conservative execution parameters, meaning crossing all spreads. So we buy at ask, we sell at bid, which it is mostly kind of conservative, if you will. We include all commissions based on TD's schedule. And so it is supposed to give you as close to reality as possible what outcomes you might be able to achieve. Now, we are connected to TD Ameritrade, as you alluded to. So you can connect your existing TD account and you can execute it on your own through Olive, using Olive to execute, as long as you approve for the adequate options level, right? So you need to be able to trade spreads, and TD has to approve that. Further down the road, we hope to be integrated to more brokers. I think that one of the uphill battle we have to fight is that, people hear options and they immediately think that, we're going to screw them over and, we're going to throw a bunch of risk at them. Well, in fact, and the proof is in the pudding. You can trust what I say, but the ultimate premise of Olive is to actually de-risk, is to risk your portfolio.
Right.
Yeah. And so honestly, it's good that you mentioned that, because at first, when I first saw Olive, I was trying to poke a bunch of holes in it myself. Like I remember we hopped on a couple calls and I asked a ton of questions, and you answered them the way that I would have hoped that, a good platform that has a strong backing would. And what I really like, and I want to touch on this strongly just for the audience listening, is you would not lose more than the underlying. Now, that's why the sandbox is so important, because right, it doesn't let you have that margin excess buying power. So you're going to be essentially the same as if you're buying 100 or however many you put on of that amount of shares. So it's like you were going to buy 100 shares of that stock, but you have a different strategy for a different goal. And I think in that market, it's important because there's not a lot of stocks that I want to buy 100 shares of right now, just outright. And that's something to definitely note. And then one more thing I actually wanted to touch on, because I was going to ask this about the bids and the spreads, the bids and the asks on the spreads. Because, I know it's multi-leg. So, you can put one call, this for the audience, you can put one call and one put, or another call or another put, or whatever it might be, short, long, however you want to do that. So thinking about that, you're saying that you do it based on the worst execution price possible, just to be that conservative. So if you were to actually carry this out, does it default to doing the worst execution price, or that's just what's inputted in the data just so we can say, well, worst case, we're going to get filled terribly, and this is where we're going to be at?
Yeah. So we would issue a limit order. And depending on, if you were to use Olive as a shadow and basically take the legs and input it into a fidelity execution, then you can specify the limit price you want, or Fidelity would give you price improvements, right? Generally, it executes better than limit, right? And the most sophisticated customers would basically, try to get as close to mid as possible.
Right.
And in our case, we err on the side of conservatism, as you can imagine, because, then people will get less than what they bargained for. They can only get more.
And that's great. And that's exactly why I wanted to ask that. Yeah. I mean, I'm really excited to look through some of the stocks that we talked about on the podcast, because what's really interesting to me is we talked positively about some and negatively about some, and some we just mentioned news about. And obviously the market's been extremely volatile, both up and down since I think it's from end of August or so when you inputted those pieces of data. So very curious to take a look at that, because that backtracking data is what really it's what sold me, and what I believe a lot of people will be interested in looking at as well. So if you want to just give a quick overview of the platform and everything it has to offer, and then we can dive into some specific stocks, that'd be great.
Sure. So allow me to share my screen here, and you can tell me if you can see it.
Yep.
So, assume that you've gone through the sign up process and if you subscribe to the Olive Pro version, which currently, costs $49 a month, you would be presented with a dashboard that looks something like this. If you had TD connected, then you'll be able to select the account in TD to actually trade in a real environment, kind of real money. But if you were just in the sandbox environment, then you would be in the sandbox account. We'll show you the Olive account value, which is, what you would get at maturity, how much buying power you have on an unlevered basis. So utilizing no margin at all. And then the dashboard shows your Olive picks, which is basically what we think is least likely to lose, 20 of them every day. So the optimization engine basically looks through the entire optionable underliers list and all option chains, and then come up with combinations of strategies that, that won't lose more than buying the underlying.
Right. Have you guys done like backtracking on this, like in terms of how successful, I guess, these Olive picks have been, or people, I don't know, if people just take all 20 of them every day? Like, what do you have any data on how well they've done it or anything?
Yeah. So, we started in earnest in June, so it's been a pretty young data set, but it's extremely well correlated, put it that way. So if you build a diversified portfolio of Olive picks, i.e., unique underliers, get 10 to 15 of them, whether in one day or across multiple days, no one has lost money in terms of maturity value. And that's part of the art here, right? Like, if we had like all the secret sauce to create unreasonable amounts of wealth, we wouldn't be talking here, right? We just keep it ourselves.
Right.
The truth here is that we want to create a market for it. Like, this is an interesting part, right? Where you can express your own views, and wisdom of the collective hopefully will do reasonably well and create some more efficient marketplace. But these are the Olive picks, and the constraint here is simply, deploy 1,000 to 2,500 per outcome. Again, completely unlevered, and the annualized ceiling, the maximum that you can make, is at least 20%.
So you can filter by how much you want, you're willing to spend, essentially, too.
You can. So that would be in the discover mode. So if you wanted to create your own parameters, the strategy, we have two kinds of strategies, fixed and variable. And essentially it boils down to, if it's fixed, then you make a fixed amount unless the underlier drops below a certain level. If it's variable, then you're counting on the underlier to go up for you to make, generally speaking. You can select based on time frame, amount, how much you want to invest per outcome. You can filter by the score, which is our own kind of algorithm generated confidence level, which is different from the standard probability of profit calculation. Cushion is how much the underlying would have to go down by at maturity for you to start losing. Stealing is the maximum cash on cash that you can make. And then the annualized ceiling is, if you hold an outcome with a ceiling of 6% for 6 months and the annualized ceiling is called 12%, right? So yes, you can filter and sort by this. You can also, look at alternate outcomes, which if you hit into one of these cards, if you don't like 31% cushion, 10% ceiling, which annualizes 22%, you can say, hey, I don't need that much cushion. Maybe 22% is enough for me. And then a 19% ceiling is what you get.
So this is cool. Can we just talk through this a little bit for those that are listening that are not very familiar with options, right? So like this is essentially showing that the stock could effectively go down, right? Or up, and you can still make money in both scenarios, right? So you just like walk the audience through how this, works from a high level.
Sure. So, I like to think of options as just a tool, like a conduit, a vehicle. It almost doesn't matter what we focus on, and it's a little bit less sexy of a word, but all we care about is outcome. Like, is the only thing that we care about is your outcome. So let's say we put together a basket of options that render this payoff diagram, right? So this is a variable outcome where you are going to rely on the underlier to go up in order for you to make a return or a meaningful amount of return. So in this case, RRC is trading at 29.05. If at maturity, which is, March 17, 2023, RRC doesn't move at all, stays at 29.05, then your outcome would make, call it $36. Okay. You're investing $2,277, $2,277. If RSC doesn't move, you're basically up flat. You make a little bit of money net of commission. So the outcome, you see the number in orange, expected P&L maturity, that shows how much it makes. So let's assume RSC tanks. So if it drops, call it 20% and it trades at $23 now. If you had put $2,200 into RSC stocks, you would lose $462. But if you let this expire at maturity, this outcome would make you $23.
Right. And I just want to hop on here for a second, just kind of explain a little more in a way that I know I assume our audience is very familiar with. So I think what's really important here is that this is not like a get rich quick kind of tool, right? Like options are tools themselves. And that's exactly what you're saying, Chai. And what it is you're creating these structured, almost parlays kind of situation here. And that's for the sports people. I know nothing about sports parlays, but that's the best way I can connect it. And so, right, like you're either doing something between this box of it's between here and between here on the up and the downside. And then you can slide that, with the slider, and then you can choose the fixed or variable, right? And so it's basically just, like you're in the kitchen, you have all these different pots, pans, and food that you can cook. And all it just helps you put it all together in one nice meal. And I think that's really the way that people should think about it, because these are not like brand new, crazy, ridiculous strategies that are just out of the blue. Like, these are things that I do often. These are things that a lot of other traders do. But what's really difficult is people who are just trying to get into options, and they want to be able to visualize it and see exactly what's actually going to be happening with their dollar amount of money for when they invest in something based on it going up and down. Because, it's very simple. If you buy, 100 shares of Apple at 150, it moves up $10, you make 1,000, goes down $10, you lose 1,000. And that's like fixed right there. That's at the closing price. That's where it is. Whereas the option, right? Like most of the time here, you're either, maybe you're buying a call, or maybe a spread, some type of debit spread, and you're shorting a put, or you're shorting some type of put spread or something like that. And so what it is you're trying to just squeeze out gains on either side to generate output. And that's really all it is. And I, back to you, but I just wanted to emphasize that home, because I think that's really how people should think about it, especially if they're new to options.
I love it just for I mean, for me, like I am still newer to options, even though I should know this by now, right? For me, I love the visualizations though. It's still just so, you know, sliding, the ability for me to say, okay, I feel like it's not going to go 20% down, or, you know, maybe give myself 30% cushion. So you get the ability to like visually see what that's going to look like. I like who is your core audience, or I guess in terms of the users, you know, the people that are currently coming, some of the data behind that, are they, you know, advanced traders? Are they more folks like me that like know enough to probably be dangerous with options? And, you know, it's more for novices, or what do you see typically?
Yeah, it's probably more people like yourself who have interest, who have a little bit of time, and who have a little bit of capital, right? We haven't been we are trying to fractionalize options, but we're not there yet.
Oh man,
Uh, but
that's interesting.
yeah, so so they come in units of larger than, what some people might like, right? Like if you have $1,000 to deploy, is like all in. Like if your entire net worth is $1,000, I would not recommend all of it, right? Because you can't build a diversified portfolio. But if you have 30,000, then I think it's very, very interesting way to deploy capital. But the core audience today, believe it or not, people who are trading, there are certain customers strangers who have put in millions of dollars through the platform, individuals, right? And they're trading the IRA, so they're a little bit older. This is completely tax efficient. It's an IRA, and they're very, very kind of eager to do more because it allows them to sleep at night. And then we have a kind of up and coming professionals who have less time but are eager to learn because this allows them to kind of stay tuned in the market. And, they don't have to feel like they have to justify to their wife or their husband that, boy, I just blew 5 grand on something that I shouldn't have been doing.
Right.
Or, it gives them loss absorption. So we see both, but all in all, I think this is more for people who can be qualified to trade margin, to trade spreads. So,
Mhm.
all the brokers have their own classification, qualification, but we cater to all. I mean, we build this with the intent that eventually, if you can buy a stock, you should be able to buy an outcome. There's nothing.
Yeah.
It's a good slogan right there. I mean, and another thing I really just wanted to, I mean, you just keep bringing up great points. I wanted to hammer on this as well. A lot of the expiries when people, maybe they hear on Twitter or whatever it is, like I bought, SPX calls for today or SPX puts or whatever it might be. Those are much different than the options that you have here, right? Like options are made out of a bunch of different Greeks that, you can, maybe we'll do an episode on diving into that. But when you have such a long amount of time for that expiration to happen, you have that time value premium that even if it moves against you, once again, like that analogy of the apple going up and down, it's going to be a very different movement to the actual P&L of that position you have at all. And that's just because of that time value. Because let's say something goes down 80% now, this is what, 2023 for March. That's, a while from now. That there's going to be almost guaranteed that there's going to be a change from now to then, whether up or down. And so that's just another thing I wanted to hammer home as well. But thinking about this for retirement accounts and the longer term people who want to get maybe tax benefits or however it might be, options also go long term, right? So you hold an option for over a year, maybe you end up exercising it, maybe you close the short legs and you keep whatever call debit spread, and it's right in the nice little part where the one that you sold above gets expired and you get to have those shares and make that profit. Those factor into your taxes as well as a long term. So that's another thing to really think about, because I think no one really holds options for, no one really talks about holding options for more than maybe a month or 2 months or maybe 6 months at the longest. But the tax benefits of that are also very big.
Yeah. And we'll show you, like in, if if the underlying moves in your favor and volatility collapses in your favor, then you will exit early at a very handsome internal rate of return. Then you can redeploy it into something else. But, I think, like you said, it's tough to explain this to everyone, but that's our mission, to do it well. And, it's probably no time better than the present because, you thought you were safe in US Treasury and you lost 15% this year, in US Treasury, 7 to
And
10.
the safest asset in the world.
Yeah. So, we think that this is probably better than the alternative. And so just to round this out, like if it goes up, then obviously you make money, right, at maturity. But the reason this is not too good to be true is because you're capped, right? To Tony's point earlier, capped kind of outcomes. So you're able to buy protection essentially. So
Right.
upside to buy protection.
I mean, I love, especially in these in the markets where it's down, right? Like anyone, maybe you could just throw a dart in the summer of 2020, like everyone was talking about, but like now it's getting harder, right? And you don't feel confident holding, just outright shares. So this is an awesome tool. So like, can we do one of the another, and maybe want to show a few more things here, but I don't love after this to go to some of the ones that we've talked about, just so our listeners can see some of the stocks of if they were to use Olive versus just buying it outright.
Yeah, sure. So if you like that outcome, then we'll go check if the data, if the market prices are still available to execute at that quote, because market prices move all the time, right?
Right.
In this case, it was probably the prices moved, so your cap is lower. In order to get this outcome, make up to 14%, 31% annualized, with cushion of 22%, you would buy and sell these legs. So the legs, we basically say this is now your cushion price, analyze at 29. You won't lose unless it drops below 22.77. You max out as if, the underlier goes up to 33.17. You put in these orders with a limit of 25 cents in your favor. So that credit of 25. And if you wanted to execute this in Sandbox, you put execute in Sandbox. If you have a TD connected, you execute in TD.
So if you have Fidelity, you can just do this manually then, at least for now.
Yeah, you would do this manually. And what people have done is they basically use Sandbox as a shadow account. So you execute this into Sandbox, you use it as a monitoring tool. And then you use Fidelity as an execution agent, which is basically what most options platforms
That's
take you to. Yeah. But if you were in TD, you can do this kind of full stream in one shot. So on that particular outcome RSC, would show up here, right? This is the outcome that we just executed into Sandbox. So it matures in March of 23. It hasn't moved yet, so there's nothing to see here. But as you can see, there's a spread embedded in all the options. So even though at maturity, if RSC doesn't move at all, you make $68. If you were to trade out of it immediately, to Tony's point earlier, there's time value, there's spread. So you are going to have to pay for the liquidity that you're going to get if you want to get out now.
Are you buying one contract at a time, or are you able to type in 10 of these, like to do the same thing?
one outcome, Avi, one outcome at a time.
Yeah.
Sorry.
So we only allow one at a time, but unless you're uniting to like in the hundreds, you're not going to move the market. So you can multiply this through. So, if you wanted 2 units of this, multiplying all the quantities by 2, you would get the exact same outcome. You would just level up on your capital. In the next iteration of the product, probably sometime next year, will actually allow you to re-optimize completely. So, if you had $2,200 to play, this is probably the best thing you can get. If you have 4,400, the best thing may not be just multiplying everything by 2. It will be something different because we'll ratio the units differently. But this is what it looks like after execution. And if you were to look at, to your point earlier, like let's look at some of the names that we put on in paper here for a little bit longer with some history, right? So Open Door as an example, this was incepted on August 23rd. Open Door was $4.64. It's now $3.28. So it's down 29%. And if you were to exit today, the outcome, you would lose 13%. But if you wait to maturity, you would make 5%. Maturity date on this one is February 17th. Yeah. And so this chart is supposed to illustrate how the cushion is engaged. So open door actually rallied a little bit, kind of went up a little bit, right? Sometime in September, probably.
Mhm.
And then it kind of just fell. It might fall further, but this is the value that we really want to offer, right? Where, hey, you could be wrong, but you won't lose your shirt, or hopefully you won't lose your shirt.
Right.
Right. And I just think, a couple points here really want to hammer home the fact that, the stock is down 29% from this price, right? And you've got the current value down 13%. Effectively, if you just bought 100 shares, you'd be down 2.5 times more than with this, right? And as we said, right, that's the same amount of buying power for this strategy as you would buy that amount of shares, but you have ample time for that to correct. And also, another thing that maybe people think that you have to hold it all the way to maturity. You don't necessarily, right? Like you could see that little point that you were talking about where it rallied. If you were in the profit, you could have taken gains there and moved it into another trade, right? So, it doesn't necessarily have this, more like the short-term day trading where options are, it's up or down based off of, IV and premium in the market and this and that. There are times when that stock will do better because let's say that the put IV comes out and calls start running up and the market reverses or whatever it might be. There are opportunities along the line that, with the cushion, you're not going to be swinging too far either way because it's once again that boxed in strategy. So having the stock go down 29%, the option outcome only down 13% is very good. Very cool.
Yeah. And, to your point, if we, if there's an opportunity to exit early, we do have kind of a built-in kind of limit, if you will, that we would execute is predefined. So if you let us auto exit, like if you want to auto exit, you would programmatically put it into the outcome. So if the algorithm finds an attractive level where, you can take your gains and move out, then it will. So in this case, I guess Shopify has actually done reasonably well.
Yeah, it's holding better than a lot of other names.
Through this period. But, as you can see, it was incepted on July 11th. It wasn't supposed to, mature. And the maturity was March 2023. But come August 11th, the system basically found the cash on cash and the IRR to be attractive to exit. So it exited automatically, and you got 6% of your, 20% cash on cash gains in a lot less time, such that your IRR is 95%. So, you get your $4,200 back into your account to deploy it elsewhere.
This is cool. We should start pulling this up on the podcast more as we're talking through some of the stocks. Just another way to look at it, right? As opposed to outright buying it. I think this is
And especially if you get that sideways market, Avi, for the next year or so, or whoever knows, that is
I mean, if someone told me I could make between 5-10%, just like feeling comfortable about that a lot more. This is not the YOLO, GameStop craziness. And you can pull up though any stock you'd want, right? In the search bar. But this is meant for people that slow and steady, right? I guess you're not going to make 50,000%. But although like these annualized gains are pretty high that you can get.
Yeah. I mean, I think, you can do what works for you, right? You can be as conservative as you want. You can be as aggressive as you want. We just hold the bar higher in that we don't quote leverage, right? So, you can easily make 5 times what we're quoting you just by making the downside that much more aggressive by using your margin, right? All these numbers are quoted without margin. So, pick a name if it's optionable, and if there's option chains for it, we would most likely have a quote for it. Remember, like when you were talking about the slider earlier, this is not something Olive created, right? We don't take risks. We don't manufacture anything. This is just simply quoting what's available in the market. Like we're simply quoting what's available in the market. And so if something is, I don't know, Datadog or something, whatever name that you have, right? Then you find whatever outcomes available. And if you find something you like, you click into it. You can change the expiry to find, we like to go a little bit longer just to see, what else is available. So here, expiring April of 2023, this is in fixed mode. If you want to see variable, click on variable and explore what else might be attractive or not to you, given your view on Datadog. And then there's a score that, accompanies each outcome based on our own kind of experience, if you will.
Could you break that down a little bit just for people? I'm sure people are going to look at that number and say 54 what? 54 olives? It'd be good to, because I know that, it's definitely has to do with the risk parameters and the risk reward based on the
Can't give the secret sauce away, Tony.
No, I know, but a light little overview that,
Yeah. So, a lot of options platforms give you probability of profit, and it's basically a standard butterfly kind of calculation, finding a market implied break even, right? We don't think that's very useful. So we wanted to create our own score based on features, fundamental and technical, throw it into a machine learning technique, let the model run, give it as much data as possible, and then let it just spit out a score for every single outcome that is available. So it's imperfect at best, but it's certainly a lot better than the standard.
Oh yeah. And you can go to any brokerage and they'll have some type of, you got a 20% chance of this and that. And it's like, really never really seen that hit.
Yeah.
But yeah.
The higher the score is, the less likely to lose money, correct?
That's right. Sorry. Yes.
Like the inverse. Yeah.
Exactly right. Yeah. Yeah. So the definition of the score is the higher the score, the safer it's supposed to be.
Okay.
Safer defined as not losing money. So higher score doesn't mean making the most money. Right.
Yeah. What were you telling us earlier? You were saying in terms of like the stats of the people that like I don't know if it was the average user or users that pick the top 20. And you said people aren't losing money, but you also said like, it was like, I don't want to misquote you, but it was like 50% or something right now already on this year versus.
Yeah. So we've been in, like we started offering this in June. So June, July, and August are the 3 cohorts that we track. So we basically look at all TD executions, right? Because we know that's real money, incepted in those 3 months that have already exited. And the composite IRR on all outcomes executed, incepting those 3 months and exited is 52%. So that's the realized internal rate of return. And the maturity value on all of the outcomes incepted are positive for the remainder.
Wow.
So, it's young and early, but people who are building a reasonably diversified portfolio, have done reasonably well through this recent.
Yeah, especially right now. I mean, those are incredible numbers. So, very cool. Well, thank you so much. I don't know if there was much more you wanted to show. We'll have to like bring this involve again, sorry, 3, 2, 1. We're going to have to involve this more into the show. And as we start talking about these, I think we'll pull a few of these up, because I think it is really interesting, especially again, during times of uncertainty and the market's either flat or chopping back and forth. Like this is a great tool.
Yeah.
Right. So I thank you so much for joining us, because we found you, and we always say like, we'll talk about the companies that we really truthfully, find valuable. And I thought in terms of why we do Pound on the Table and why we like to have Tony and Joey, and I ask all the questions, of what's going on in the market, is to really educate people and make sure people, hopefully can be in the best position to have a better understanding of how to invest. Right. And so this is now another tool in the tool shed that people can use, I think, that will mitigate a lot of risk, right? And give you guys some downside risk in times where, me and Tony are both not so excited about the market right now. So this is a good option to still make money and stay afloat, instead of getting crushed with a lot of this. So
Yeah. Well, thank you for having me on,
yeah,
and
long time coming, Chai. So I really appreciate it. Very
yeah,
cool. Well, thanks so much again, and we'll have to do this again sometime.
sounds good. Thanks.